So today we are evaluating the Nifty 26 Jan futures chart. It's on the 3 minute time frame. So if you look at the 9:15 candle, there is a big red, and yeah, there was a gap up. On Friday closed it closed at 23,294.40, and there was a gap up, and it opened today at 23,332, almost a gap of 40, 40 points. So what are we trying to learn today is a relation between the candles and RSI. How are we going to evaluate RSI? There are few settings that I'm going to show you all. We need just the upper limit and the lower limit. The upper limit should be 60, the lower limit should be 40. And that's it. That is the change that you have to do in your RSI indicator. Now, why this? Because we are going to treat the RSI upper limit as the resistance and the lower limit as the support. So instead of taking a moving average as a resistance and support, or a trend line as a resistance and support, we will work with RSI as resistance and support. So this is the live chart of 20th Jan 2025. If you see, there was a resistance over here. I'll mark this. So at 9:15, you got a good resistance on the upper limit line, that is 60. And it was a perfect resistance that you got. Let me expand this, and you will see that we got a perfect resistance on the upper limit 60. Now, if we evaluate only the RSI indicator, we found a resistance. Now, this will be the entry point. The next channel that comes after resistance is the entry point. That is this one, right? Because the previous candle, the previous day's 3:27 p.m. candle, it went till here, and today's 9:15 candle started from here and then it came down. So this is the entry point. Let's put entry. Let's mark this as resistance, and this will be the short. We are going to enter the market with a short. Okay, so we'll sell the Nifty futures, and now let's figure out how do we come to a conclusion, where do we exit. So there are very few criterias that you need to understand in RSI indicator when we work with resistance and support in RSI. When you do this, when you make an entry here, the next candle was a green candle because there was an uptick. The second candle after this was a sideways, maybe a small red candle. Okay, we'll evaluate this. We are not seeing the candles right now. So let's keep it for the next discussion. Let's finish this for now. We'll come down again. There was a downtick, again a big downtick. So that means we are finding, because the downticks are big, um, we can guess that the candles might be big. Okay, so again there was a big downtick, so that means it's a big red candle. Now there are two things that you need to evaluate. Okay, now when the downtick comes here, you need to wait for the next tick. If it is a downtick, a continuation here, Okay, let me show this to you. Uh, let's say the downtick continues like this. Okay, from here to here. So that means you don't need to do anything because the trend is still falling. You will definitely see a red candle if there is a downtick. Now, as we see in this case, we see an uptick, right? We see an uptick. So depending on the candle, depending on how the candle looks, whether it's a big green candle or a very small dodgy or a small hammer or a small green candle, we can keep the trade as is. We can keep the trade going instead of exiting, okay, on a green candle, because it might happen after a small green tick, a small green candle, the price will again fall down. Okay, there will be the next candle will be a red candle. So as we see here, the next candle was definitely a red candle here. So we got the benefit of holding on to the trade. But now after this red candle, again you see that there was an uptick. Now see this uptick, it depends again. You need to evaluate what kind of a green candle was formed. Okay. Depending on what kind of a green candle you see, we will decide whether we need to exit the trade or keep holding on to the trade. Okay. So let's go ahead and check the candles and evaluate it further. Okay. So this was a good resistance, the first 915 candle. So we took our trade here. That is 23 to 60. Now the next candle was a green candle. The next candle after that was uh, a green candle definitely, but the body was very small. That means the price was pushed down. But first the price was pushed down, then the price went up, and then again the price was pushed down. So the body is very small, and we have two big upper and lower wicks. So we'll hold on to the trade. Again, we got a red candle with a downtick. Again, a red candle with a downtick. Now here we had to decide whether we exit here, right? On this candle, we had to decide whether we will exit or we will hold on to the trade. So as I said, if it's a big green candle, not a big green candle, but a green candle with a big body, that means we should exit the trade. There is a possibility of reversal, the trend change. Now, as we see that again, there are two wicks bigger than the body, we can hold on to the trade. And again, if you see the next tick was down with a big body, with a big red body. So that means it's a good sign, right? Now let's see how many points did we collect here? 260, 23, 260 to 23 to 88. Now, what happens is that you need to decide whether you want to go ahead or not, right? But what we thought is let's go ahead and analyze further. We saw that the next candle was a green candle, this one, with a big body and smaller wicks as compared to the body. So, if you want to exit immediately as you see that the price is rising here, you can exit, or you can wait for the candle to close and exit at the closing price of this candle. So if we exit at the closing price of this candle, what we see is the entry price was 23,260. The exit price is 23,240. So you have gained 20 points here. Now 20 points is a good, point. I mean, 20 points is good. in a matter of how many minutes to 9:18 to 9:39. That means almost 20 minutes, right? So in 20 minutes, you have gained 20 points. So the lot size of one Nifty futures is 25. You will get around 40 points, right? 40 points, 400 rupees you will earn in this trade in 20 minutes. Now, if you're going with a bigger lot size, definitely you are going to get a big winner here. 20 points is good in 20 minutes, I believe, for beginners. So this is how we evaluate RSI when we use RSI as resistance and support, and this is how we evaluate the candle along with RSI. So this is it for now. We'll come up with more such videos on RSI support and resistance, how to use it in different contracts. I also use RSI resistance and support in options. So we'll evaluate that as well. That you have learned a lot as a beginner or even as an experienced person. If you have learned something new, or if you had some knowledge before regarding RSI, but this video has added on to your knowledge, do give a like to this video. It will help me push myself more and more to give you more content like this, more in detail of how to use RSI and candles together in order to do your exit, do your entries, do your exit, and also a stop loss. All right, see you in the next video. Stay tuned.